Hey, Scott. Hey, Steve. Happy Monday to everyone. How's it going?
Hello, it's going good. Going good.
What an interesting Monday it turned out to be.
Oh, yeah.
All
Especially
right.
if you're watching the futures last night.
Of course, of course. We go from, I don't know. I'm sure there was excitement all day. Excitement, maybe a little bit of fear as well. Hey, welcome to the market. Today, guys, wow, it's December 4th. November's in the history books. The holidays will be upon us soon, and then we'll be charging full bore into a new year, 2018, not that far away. So welcome everybody to another edition of the Office Hours webinar with myself and Steve Gomez. Before we get on to the fun stuff, though, a quick pause to make sure the legal department does not have conniptions. So just want to make sure that everybody in attendance is aware of the fact that we are providing this information and this content for you here today for educational purposes only. Please do not misconstrue it as investment advice. If you need investment advice, what to do, what to buy, what to sell, when to do it, how long to hold it, all that good stuff, please seek out a registered investment advisor or another licensed individual, such as a stock broker, so to speak. So once again, all the content here today, educational purposes only. Now, for the regular people, please bear with us. For the people that might be tuning in for the first time, always like to give everyone a little description here of the community that we've built around the award-winning technology known as Trade Ideas. And of course, it all kind of starts off with the Traders Room, our live trading room, which is hosted every day by Mr. Barry Anderson. He opens the room up about 30 minutes before the market every day. And unless there's something crazy going on, Barry is always there. He hates to be away from the room. He does a very good job at what he does in there, not only sharing his techniques, showcasing how he uses the technology, but also does a pretty good job at moderating that room, you know, keeping 400, 500, 600 people in line and keeping the content information flow at the very highest levels. So if you haven't been taking advantage of the trading room, it's free. You don't even have to have a subscription to Trade Ideas to get in there and see what it's all about. So get in there, sign up. Of course, today we have office hours with myself and Steve. Steve takes the helm tomorrow on Tuesdays. Andy Linlaw rides shotgun with him in the Trade of the Week webinar. Then we get to the midpoint, good old hump day, and we change things up a little bit with a Q&A demo with the CEO, Dan Merkin, and our Chief Technical Officer, Brad Williams. Always entertaining. Andy's going to round out the hourly webinars on Thursday, and I ride shotgun with him in the trading studio. We like to shift gears just a little bit on Fridays, and what we've been doing and we'll continue to do is have a 3-hour webinar from 11 a.m. to 2 p.m. Eastern. Myself, Steve, and Andy, and sometimes the newest addition to the team, Sean, is in there as well. So you got 3 to 4 of us all putting our heads together, helping you get your questions answered, anything Trade Ideas related at this point, with the exception of Brokerage Plus. That will be included, though, as soon as Brokerage Plus comes out of beta, which we don't know, but it's getting pretty close. All right, so that pretty much outlines all of the weekly webinars that we have going on. The Friday support session, Barry's Trading Room. Once again, just a peek at how our subscriber base has been increasing since we introduced Holly the AI. And I'd be remiss if I forgot to mention the fact that when you sign up at Trade Ideas, basic package, premium package, regardless, you are entitled to a free 1-hour training session. Myself, Steve, Andy, Sean, we're all in the mix. All you have to do is sign up through the automated system to take advantage of that. And the sooner you do that, the better off you're going to be. You want that learning curve to be as short as possible. I almost ran out of room today. Pretty packed with information. Lots of information flying around today. Was it an easy trading day? Never is. But today was a little bit more challenging for several different reasons. I guess it would probably be a good time to pass it over to you, Steve, because wow, Texas have a lot to show us. So 1 second, and you should have it now.
All right, let me grab it. Clear my screen of anything embarrassing. All right, everybody. Somebody mentioned click in the questions box, so I had to pull it up and look at it. And yes, it is click, a semiconductor stock making an interesting gap fill there. Could be one to watch for a possible turnaround, but that's not what I'm here to talk about. I'm here to talk about the market in general, and we always start with the SPYs, and I always start with this trend line, which has been holding forever. A little bit of bearishness here, but we got right back on track. And now, as I've been saying lately, we are moving higher above the trend line, getting into super overbought conditions, if there is such a thing. So first glance is the trend line in the SPY is obviously intact, no threat there. The only issue is that how far are we going to get above this trend line before standard deviations kind of bring us back to earth? So with that said, there's two kind of topics I wanted to focus on today. The first is what happened on Friday, this giant downwash and purchasing back. Well, if you were around on Friday, you know we had some news that came out that wasn't necessarily what the market may had thought the news was at first blush. Once the news was disseminated and understood, the market was bought back, and the spiders and the Qs, there's the Q on Friday and the Dow, they all kind of had that same giant bottoming tail with the sell-off and the buyback. Well, I want to focus for a second on what happened on Friday. My God, look at IWM.
Right, see, that's what I was about to ask. Like, so once again, what caused all this panic selling?
Well, what caused all the panic selling was some sort of news that was disseminated from the special counsel Mueller, and there was an operative word in there that was wrong, and it was read incorrectly, and everybody thought it was going to be really, really, really bad news. But once they looked at it, the market determined it really wasn't going to be bad news. But let's forget what the news was aside. I mean, this could have been aliens, you know,
right,
visited Universal Studios and killed people. I mean, for all I know, it could be weird, bizarre news. Forget what the news was. The point was, this market, in my opinion, is on a hair trigger, okay? And when you get a stock, an index like the SPYs, like I said, that is this far above its trend line, this many standard deviations above its normal trend, overbought is probably an understatement. When you get that kind of a market, Friday is not so much really of a surprise. What it's telling us is that, yes, this market knows it's overbought. It knows it's way above its moving averages and its trend line, and it didn't really seem to care at the end of the day. But there was a point in time, and my whole point here is that we are in the throngs of a very skittish market. Okay, it didn't take much for the bids to disappear and the algorithms to come in and start hunting and drilling prices. Now, that said, the things that are kind of the higher flyers that have had a really good move, like, you know, Micron, things like that, they got just decimated after coming into Friday anyway. So stocks that get ahead of themselves, you know, this is the kind of downside that is possibly waiting for it. Same with the SMHs, the semiconductors. So when I look at the SPY, which is very much overbought, and we saw what we had on Friday, again, it's just not much of a surprise that this market is looking for a reason to take a shower. It's looking for a reason to pull back and correct a little bit. So we are on a skittish hair trigger. The news that came out on Friday obviously wasn't enough to bring the market down. So let's talk about the other thing that I find interesting. Well, after Friday's close, we got news that the tax bill was moving forward nicely through the Senate and probably very close to becoming law. So the second axiom I want to share with you guys is buy the rumor and sell the news. You guys have probably heard that. If you haven't, it's a great one. Buy the rumor, sell the news. Here's the market buying the rumor of the tax plan becoming a reality. And then what happened on Friday and then on Sunday, last night, the futures gapped up almost 0.5%. And they opened up today almost 0.5% on that particular news. But that doesn't mean we get to trade, open up and have the trades move and gap up and go for us higher. We had a complete sell the news event today across the board. The gap and the spiders were not held, the S&P. The gap in the Russell 2000 was not held. The gap in the Qs was clearly not held, and even more so, if we look at the daily chart, these Qs are starting to make some noise again. Big down day last week with high volume. Big down day again today with high volume, almost 2 times normal volume to the downside. These 2 days right here, this is the kind of stuff that was getting me bearish a little bit back here in the spiders when we had a big down day followed by another big down day with 2 or 3 times normal downside volume. Now, I'm not saying that's going to happen again, but I'm saying that there is some caution flags being thrown up today. We had a major gap up on major tax news, and it was done nothing but sold from the open. So, you know, the people that were positioned into this news event were probably taking profits right on the open. And so today really is a perfect example of buy the rumor, sell the news. All of the indexes finished negative except for the Dow. Look at that chart. Believe it or not, this chart still shows us the Dow closed at all-time highs. Well, did it? Okay, it did technically, but how did it do it? It capped up and closed on absolute lows, which still happen to be the highest close that we've had to date. So getting a little bit of mixed signals here in the way in which the market gapped up on news and sold off heavily. So where do we go from here? I would watch tomorrow, all right? I probably fully expect some weakness on the open tomorrow, but I think the second half of the day is really going to be the tell. Up until now, the second half of the day is where the buyers step in, they take the morning weakness and buy the dip and use that as an opportunity to push the market higher, including Friday and the news we had on Friday. If for some reason tomorrow we open up weak and we stay weak and we close on lows again tomorrow, well, I'm going to start getting even a little bit more cautious about more upside. We may be closer to a market shower that is much needed to reset a lot of these charts and reset a lot of these setups. So I found that interesting today. It was definitely a sell the news day. I found it interesting on Friday that the market is on a very skittish firm holding, not so firm holding. When news comes out, they are selling first and then asking questions later and buying it back. So that sentiment is still probably buried very deeply in the sentiment of our markets. Let's just see what tomorrow brings, if there's any follow through. So tomorrow, you know, if we close back on lows, now we're starting to see something different that we haven't seen, because what we've seen coming into today is the markets that start off with some selling and some weakness and then shrug off North Korean missiles, shrugging off news out of DC, shrugging off other stuff. If we don't get that shrugging off tomorrow going into the close, then we might start to see possibly change in the winds. I don't know. One last thing before I go, for those that do pay attention, the trade of the week was IBM. What I found interesting was a couple things. Holly had a buy in IBM mid last week, kind of saw something intraday that sparked some interest. But today we broke through the trigger point and closed very nicely on a stock that, you know, is a tech stock, software stock, AI, machine learning stock, whatever you want to call it. But with the Qs gapping up like this, selling off, bouncing midday, then selling off back to lows, I'm pretty happy with the way the trade of the week, IBM, did not fall victim to a lot of the other technology stuff that we see in the NASDAQ. So those are a few of my observations for today, Jamie, and that's what I got.
Excellent stuff, Steve. And that IBM, that's strong, 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 strong. So, you know, hey, we do get a little updraft. Should even do better, hopefully. We'll see.
Yeah.
But good stuff, good stuff. I mean,
see what tomorrow brings.
We're in no man's land, and we got crazy macroeconomics being fired at us as well. Hey, it's anybody's game. All right, let me grab the baton here.
Cool.
And you should have ours back on now. Okay.
Yeah, I see you.
All right, so Steve so eloquently put all that in focus for us. And then, of course, we're going to talk about Holly here. But, of course, I'd like to kind of touch on expectations first, because, boy, they weren't exactly easy to derive today. And Steve kind of hit the nail on the head at the end of his presentation there on the indexes with using the term mixed signals. Boy, that could be the theme of the day, because mixed signals were par for the course. So let's do this. So first and foremost, expectations before we ever start pushing any buttons, unless we see something that's just too good to pass up, which usually should have been passed up, trying to get something out in that first 15 minutes. Not saying that that's not possible. I'm just saying that, you know, that first 15-minute period is definitely double black diamond if you're a skier. So you don't want to go down that slope unless you're highly experienced, because bodily injury is more than likely going to happen. In this case, financial injury. So giving things time to develop. So of course, those of you who are familiar with my methodology know that I like to give the market 15 minutes and take a look at those compare count windows. So that's what we're going to show you here. All right, here they were after the first 15 minutes. Now, wow. Across the board here, you know, 65, 75. Of course, I pay more attention to these guys over here, because it's the 4 billion, 5 billion plus market cap. These are some very strong readings to the upside. On any other day, we're in an up market. These typically carry a lot more weight than when we would see the reverse of this, 61, 62% downside. Of course, we always talk about the fact that unless we've got massive volume, we don't really have to worry about that. We look for a place of support on the daily to try to tell us, okay, when should we start trying to pick up some longs or whatnot. But in the past, we've seen days like this where we maybe gap up slightly, maybe it's flat, maybe it's a slight gap down. When we see metrics like this, boy, I start rubbing my hands together. But today we had a significant gap up, you know, almost 2 points on the SPY, right? So of course, instead of just jumping in headlong, we have to kind of wait to see, well, what's the market going to whisper to me if I know where to, you know where to look, know what to listen to. So first and foremost, mixed signals again, huge buying bias in that first 15 minutes. Now, when we take a look at that time period here, and here I've got my 5-minute intraday on the SPY, you know, we get that information. Wow, pretty big buying bias. Actually, I'm looking at the wrong time frame here. Give me a second. That didn't look right. Okay, so now we're looking at the 5-minute chart, and of course, it looked like we were going to gap and go at first, right? So if I spin this little guy around here, we get that information right here, and of course, what's happening? Boom, 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 heading higher. But keep in mind, this was a pretty significant gap up, almost 2 points on the SPY from Friday's prior close to right up here. So the bigger the gap, the more difficult things typically become. Doesn't matter if you're a human being or Holly, which we'll get into here shortly, but we get the information right here. Now, typically what I like to do, and of course I did this a lot this morning, is when I see a nice setup come through from my favorite high volume tickers, which are the Turbo Up Family No Resistance and its counterpart, I like to look for these nice tight consolidations. So here I am looking at my compare count windows 15 minutes in. If we could just kind of enlarge this, and I can just kind of scroll through here. Wow, first one out of the chute, a little after 30 minutes this morning, was CAT. Looking like it's wanting to go, right? So I'm keeping my eyes on CAT. Then I get Magellan. Notice the nice little tight consolidations that these guys are putting in. So then I'm just like, wow, there's a lot of these guys coming through, and look, they all look pretty similar. Not bad little consolidations and push throughs with high volume. Oh, there's RJF, even tighter than the one before. So I'm thinking to myself, man, these are just coming left and right. Look, Ollie. Oh, look, LII, Federal Express. They just keep coming, and they're looking exactly the same, which right off the bat, I'm thinking to myself, things don't usually look like this. Boy, if we do take off and go, man, it's just, you're telling me that all these are going to be good trades, and so I'm kind of thinking it's just too good to be true, right? And then sure enough, and ladies and gentlemen, I could keep going through these, but you're just going to keep seeing more of the same. I spit out about 20 some odd of these on Twitter today. Low, 5. And guess what? Just like any day, there were probably about 1, 2, 3 or 4 of that 20 something that actually kept going today. just as with any other, day. Things, the market's going down, there are those things that are strong and vice versa. But guess what? After about 7, 8, 9 of these, what do I start noticing? They're hugging the line at best, or more than likely, they're hugging the line for a little bit, and then they're folding back over. So once I see the first 7 or 8 do this, what does that tell me about how to treat the next ones I see? Well, Jamie, there's not any follow through. They're hugging the line. Maybe 1 out of 10 are continuing, but the other ones are just rolling right back over. And a lot of them hugged the line for a while before they fell over. Some of them went with the market, some of them lagged a little bit. But the bottom line is I was able to pick up on this in that time period, and then there were still plenty of more that were presenting this type of pattern as the day went along. After the downdraft had kind of, we saw the momentum fading. Notice how green everything was. Notice my comment. Hey, 'tis the season for green and red, but usually we don't like to see green and red together on this little indice top list here. All right, and of course, look at those monster volume levels that had already been put in. All right, that were pretty much maintained throughout the day. So for a lot of these guys, whether we're going long or short, the risk is very tolerable. But once we identify, hey, these things are lining up perfectly, the only problem is they're rolling over, well then maybe it's better to try to short these things with extremely low risk than, keep hoping, oh, well, this one's going to be the one that goes because all the other ones didn't. No, it's kind of the opposite way. None of them are going. Risk is low. Might be the day to take shorts on these things, because based on the compare counts, which told us monster buying in the first 15 minutes, we have to factor in this guy right here. It's like it uses up all of its energy. We just don't get to participate in it. And that's the issue with gaps. Make it harder for us, makes it harder for Holly as well. And also, too, keep in mind, as I was seeing this unfold and observing, I want to pop back over here to my cheat sheet, because obviously I like to make notes because I forget very easily. But during this period where we're seeing, what those plays are doing, those perfect little setups that there's way too many of, which is the first kind of strange thing to pay attention to, is, okay, we're throwing grass in the air. We're going, okay, it keeps going left, it keeps going up. I mean, going left, that means, the wind is blowing that way. But back in the old days, Steve, when we were hitting the so's buttons, I remember when I was brand new and I didn't really understand at the time what the guy was trying to tell me. But since we were newbie traders, we had experienced, quote unquote, traders, hell, they probably at least been trading 6 months, come give us advice on how we could figure out, which way the wind would be blowing. And you know what I'm talking about here when I say, when we looked at Intel back in the day, and we still had fractions and so's and all that good stuff, you'd see a whole line of offers on the right side. Maybe it was 25 1/4, whole row of bids on the left side, 25 1/8, just stacked up and down. I mean, you could hit the bid if you wanted to, you could hit the offer. But if we wanted to kind of get a feel, are there buyers or sellers in this stock, we do what we float an offer out on this other system called SelectNet. So you throw out an offer at 25 1/4 and somebody hits you. Throw out another one. Okay, well, I know they're buying on SelectNet, so I'm going to start taking out these offers when I see them get hit, and I know that there's a pretty good chance that there's buyers in here. They just haven't really kicked it into gear yet. All right, so we can kind of get a feel based on throwing out orders and see who hits what on these old systems that are no longer in existence. Well, since we don't have those to rely on anymore, we have to try to extrapolate the same information, but through a different methodology. And so waiting when you're unsure is the modern day version of that. Okay, I've seen 10 of these things come through. They're perfect, but they're not working. Maybe I should take the other side, because guess what? At that point in the day, there were still 10, 12, 13 more that had not presented themselves yet. So I hope that makes sense. And if anybody has a question on it, by all means, type it into the panel. I'll try to explain it in a little bit more detail, but it's pretty straightforward. So, once again, listening to what the market is telling us. We had mixed signals. We had the gap up. We had the huge compare count volume readings, but we always have to go, okay, not going to put near as much credence in this first 15 minutes, depending on which way the gap is and how big it is. All right, so that kind of gets us through this part right here. Now let's talk about what our highly advanced prop AI model did today. And of course, you're going to notice some correlations. Risk off, risk on. Doesn't matter which model we're looking at here. Chart pattern is pretty much identical. This one's a little bit more stretched out, and you would have, lost a little bit more money trying to hold everything versus obeying Holly and her rule set. 67 cents versus $1.36 on the downside. Before we get into the few nuggets that she did offer today, I want to talk about the fact that she's been doing quite well over the duration. So I've prepped a couple of charts here. So here we see Holly since inception, looking at the best of mode. Okay, pretty impressive still, all right? And of course, going back to the last time before today, which was a losing day, technically, we'd have to go all the way back to here. So she's been on quite the tear, all right, over the past several sessions, meaning almost 2 weeks here. But never just like to throw up this chart. Want to also put up this chart, which is Holly in her most conservative mode, risk off, only for this year. And we can see, of course, not near as juicy comparing, inception, since we're only looking at this year, but in the most conservative mode. And we can still see a nice big gap here, and it continues to widen the gap between Holly and performance of the SPY ETF. So Holly keeps on doing her job, but of course, as with any system, it's going to have its losing day from time to time. And today, Steve and I were just talking last night. He's like, yeah, here comes the big gap. We'll see what happens with Holly. So you see, our expectations were already being set last night. And, this is just repetition, ladies and gentlemen. The more you get into this methodology, which, all these little things I'm talking about, how to set your expectations, all right? Staying out a little bit, to kind of listen to what the market is whispering to you. It's a methodology. And so the more you do it, the more comfortable you're going to be. Now let's get back into Holly's performance for the day. So we can see once again, right off the bat, me along with maybe a nice little crowd of people. At this point in time, you're thinking, well, you just don't know yet. Maybe we keep on pushing higher. Holly got started about, no early start for Holly today, but usually an early start is 5 minutes in. Today she didn't get active until almost right at 19, 20 minutes into the open. Spit out AEO and INO, and right off the bat gets a nice little green tick going here. So I'm thinking, oh, maybe Holly won't, maybe today's different. Maybe the gap won't impact her as much. But of course, that was short-lived. We quickly got the regression back down to the 0 line, just like a lot of the stocks were doing, right? That's another correlation. Took one more little stab at green and then just pretty much gave up the ghost after that. And once again, it doesn't matter if it's the risk off or the risk on, same little spikes and gyrations there. Of course, Holly came stacked with a pretty good little stack of strategies today. She came with 12 strategies. That's another thing that I pick up on. Anytime there's even every time there's 12 or more strategies, which usually she'll top out right about 14, okay? But hey, higher strategy count today. Of course, we had more shorts show up. So out of the 12 strategies, we had 4 shorts, of course. Today, this little guy was the only one that squeezed one out. Downward dog was a winning trade, and we'll look at that one in just a second here. But, overperforming here because only one trade was issued, overperforming here on 3. Then we got underperforming, slightly over, and then these guys right here. So let's take a look at some of the trades. Usually we like to talk about, hey, you could have taken advantage of this one and got some risk on money by accepting a little bit more risk. Or, you know, if you saw Holly upside down on this one, well, you know, she never hit her hard stop, so you had a better chance, or you had a chance actually to get a better price than her, you know, playing it off the approach to the hard stop, but not quite getting there. But today, pretty slim pickings. And the fact that, you know, out of a total of 16 trades, only one of those guys was short. And this is the other kind of anomaly that lets us know what's happening here. Because most of the time, we don't really see Holly get stopped out of a lot of things. Maybe we'll see one or two in a trading session on a higher trade count. But today we had not so, you know, not a huge trade count, but not a small one either, 16. And we can see out of the 16, 25% of those, boom, the stops were hit. And we can see that that was really the best mode to be in today, because they would have just gotten bigger today. So those hard stops are what we place tons of, you know, you can't ever ignore the hard stop, right? If we see Holly getting out for reduced risk, we can try to stay in it, but do yourself a favor, always stick to those hard stops. Now, what about risk on money today? Was there any of that out there? A little bit. We can see the spreads between the top performers here. You know, -1 cent versus a 35-cent winner. Okay, well, why did Holly feel the need to get out here? Well, entry point right here. And the trade just immediately proceeds to move against. Doesn't ever get the stop, but Holly has the built-in reduced risk functionality, which tells her the longer we're in the trade and it's not working, you have the right to go ahead and pinch that one off and get it out of the way and reduce that risk. And she does that here and loses a penny. And then we can see regression back up to the original entry line and then a move higher. And then, of course, the nice thing, that's what the stop is for. That's our risk level. So, you know, we could have went with Holly on this one and set a price alert for this second excursion back up through there. Or perhaps we just noticed the Holly's down in the trade. We were busy doing something else and we're thinking, well, if it goes down here and just barely misses the stop and starts to head back up, well, then that makes me comfortable. And I'm going to go ahead and try to take a piece of this one, get a better price than what Holly is showing. And clearly, my risk is going to be a little bit less too because my price is better. So this one is a good example of maybe it could have been a trade around, and then there was also risk on money on the table as well by staying in the trade a little bit longer here. And Chris, I see your question. Looks like Steve did a good job at answering it there. Let's see here.
IBM might be a good example if you put that up.
That's exactly what I was thinking here. So I just pulled IBM back up, trade of the week on my intraday here, and then I look back on the daily, and I can see that
coming out of that nice congestion too. I just want to add that. That's what makes that chart look nice, coming out of that nice 3-day congestion there.
And so Holly signaled IBM on an intraday play there. But of course, you know, we've been adding this additional information to our history every time the AI buys it. We're going to mark up the daily chart as well, because Holly is pointing out things to you. And of course, what makes something a potential good day, overnight or swing trade is basically what we're deriving from the daily chart. Where might be the next stopping point, the resistance level? You know, that's going to dictate to us, well, there might be some more meat on the bone. We're going to hold for X amount of days, but of course, only assuming if the risk is in place.
And a lot of times, Holly will take those intraday trades based on a blast of volume coming through, and sometimes that blast of volume might be an early indicator to more to come.
Right, and so, you know, we all saw IBM triggered on that day, and we all went, ooh, that looks really good coming out of that nice little base there, clearly identifiable depending on how risk averse you might be. But you can see just the real tight little range there, a penetration below that range actually kept you in the trade here. So
it was a tight range day, but the point is, you would not have had IBM on your radar had Holly not brought it up. That's kind of the underlying deal there.
Let's see here. hey, a little big guy kicked out a little big guy winner today. And when we look here and we see, oh, well, Holly only made 6 cents, and if he would have stayed in it, 14 cents. But that's a nice percentage, you know. That little guy gave you the opportunity to make 5% on a pretty pain-free trade today. Of course, you know, coming out of this little congestion area here, I mean, looks very similar to the days and what we saw over here, just a lot longer in a different time frame, right? So when we see Holly call the play right here at 291, you know, what my eyes immediately go to is, this is a very identifiable, almost picture perfect range break, right? So we get Holly telling us about it. It looks like the volume was pretty significant in this little company today as well. Finished today on a 4.67 relative volume. And probably at this time, we had relatively high 1 minute and 5 minute volume as well. But the way I like to stack these up is, number one, it's coming from little big guy, which came to the party with 63.3% expectations on its side. So we got that going for us. We also have a nice clean visual range break here. And of course, the best thing about this trade, pain-free, you know, assuming you're able to get it in a timely fashion here. This is one that just kept on cruising. And by the way, seems like it was like the buy it up algo was just perfectly in tune with this. It was taking little breaks. Okay, bye, bye, bye. Okay, take a break. Okay, bye, bye, bye. Okay, let's take a little break here. Okay, bye, bye, bye. I mean, once you identified it here, you had at least 2 more opportunities to press that position, you know, if that's what you wanted to do. And that's always one of the harder things for new traders to pick up on. Hey, I always hear I'm supposed to add to my winners. This just makes a lot of sense here when they start doing this type of pattern.
I was going to mention, since you were talking about, you know, discretionary decision-making processes of when to get out, you know, risk on, risk off, trade arounds, the value of the entry really being the entry, not so much the exit. Sometimes we'll look at the profit save or risk reduce risk, and, you know, maybe we'll say I'm going to stick with this a little bit longer. But what I want to highlight is at the bottom, there's one out of those 5 exit reasons called stop hit. And today, Holly showed us why it's never really advisable. And I've said this many times, and I will continue to say it. Probably not a good idea to argue with stop hit when it comes to Holly. I don't mean argue, I mean maybe change your mind or stick around a little bit longer, because every 4 examples there of stop hit today, the price went on to lower prices. And so one of the things I've noticed is that, you know, profit save is a good one because the stock is in the money. Maybe you want to hang on for a little bit longer than Holly's going to get out of. But when the exit reason of the AI is because a stop was hit, there's really not much to argue about on that. In my experience, Jamie's experience, Annie's experience has all pretty much seen that, yeah, that was probably a good reason to get out there, because more often than not, the price does seem to go lower than the original stop. So I've said it before, and I just wanted to use today as another example to just weigh in and remind people that the exit reason of stop hit is usually a pretty good reason to follow Holly out of the trade, as opposed to the other ones can have a bit more discretion to them.
Yeah, Steve, good point. And I'm telling you, when I see these things unfolding, these are almost like some of my favorite things to watch on Holly now. It's okay, it throws a little wiggle because that's what stocks do. It's never easy, but puts its bottom in well before the stop and then starts another little bullish pattern here. All right. So a lot of the times it's real, you know, it's never easy, but getting a better price than Holly, having a lower risk than Holly, just based on watching the thing unfold and waiting for a little confirmation here. But as Steve said, if it punches this line, game over. That trade is over. So there you have it. Otherwise, not a whole lot of risk on meat left on the bone today. We had this little nice winner, maybe an extra 5 cents here. But interestingly enough, breakout, this guy right here. Okay, CRI. You know, what can you not really see here unless you're watching a max profit column like I've got right here? Well, if we stayed in the trade all day, up 5 cents. Holly made 1 cent. But look what you can't see unless you were right there. At one point, you still had the opportunity, you were up 75 cents in this trade today. So even on a day like today, it's still pretty darn impressive to see, even if we throw out the 5 and 6 centers, which, had a little bit of time to figure out, well, yay, nay, adjust my stop back to flat or reduce my risk. But even taking out the smaller ones here, even on a day like today, pretty much going all long, except for this guy right here, always a chance to get out for something, which, not saying you can base your whole trading methodology around this. It's just an interesting metric to point out, and it seems to be the case pretty much all the time. Fast market, slow market, sideways, up, down, big down day, big up day, or what we had today. Big up day followed by a full gap closure. All right, looking at the questions, Steve's doing an excellent job at keeping them caught up. So let's now talk about, well, longs weren't working. What about shorts? And fear not, because the windows that I get these plays from here in a minute, once I show you this last window, I will drop all of them into the chat area so that anybody that wants to give them a whirl can do so. So let's talk about what was working to the downside. And of course, there aren't as many of these guys coming through, but they're starting to show up, right? And of course, these are going to be the ones that are at all-time lows with no support, which can make for some very nice down moves. So from this one today, we were told about this stock, CEIX, Consolidated Energy, and we can see it's support for mining in that sector. But what do we have here? Well, we've got a little bit of downside action followed by a nice sideways consolidation pretty much all day, and then towards the end here we break down. And not only do we break down, but we break down with pretty sizable volume. This turbo down, no support, identified it in this candle here. Let's see, where'd my arrow go? There we go. Okay, so we get it right here, plenty of time to act, and of course, look what happens. I mean, nice down move, and it's not some $5 stock. Thing was still above 20 here, and even better, when we look over here, what do we see happening? So these little guys are starting to show up more and more frequently. Of course, we're used to seeing this to the inverted side, right? We used to see this, pop up, keep on going up, but now more of these guys are starting to show up. So we had CEIX today, which was nice and identifiable, just using good old price action and volume. And then we had this little guy as well. Now, during this initial little downward glut here, of course, put in a wick, kind of ruin the chart a little bit, but this is all up for interpretation depending on if you like to play candle bodies or if you like to be a stickler, a purist, and use the wicks as well. Actually, we can identify two different possible entries here. Candle bodies over here as it was pecking through on high volume, or if you're the purist, wouldn't have technically broken out till down here, all right? And you still get some nice follow through, and you're looking at a stock that didn't do a whole lot of volume, but was pretty close to normal. But during these pushes, we definitely saw spikes on the 1 and 5 minute volume levels. And once again, it's one of these guys that there's no support, okay? These guys are in the abyss, just the exact opposite of what we've seen, continuing to pull this market up, but there's more and more of these guys showing up, all right? So two windows here that I'm going to drop into the chat. One is the turbo down family, no support, and of course, the guy that's been producing most of the stuff because we're in the constant up market until we're not, is the turbo up, no resistance. So no support, meaning it's going to be in the abyss with no support. No resistance, meaning it's going to be in blue sky, having just recently broke out on its daily pattern. So just because we don't have any support doesn't mean it's going to go down, down, down without breathing, and vice versa on the upside. But those are very nice attributes to have in a short and a long trade here.
So you're popping those into the chat window, is that what you said?
I am just about to.
All right, so I'll tell people that don't realize what he's doing on your GoToWebinar floating toolbar. where you ask the questions panel and poll panels. Well, there's one called a chat panel. If you just click the little triangle on that chat window, it'll open up and you'll have access to the explanation of the alert and then the cloud link of that alert. And once you've got the cloud link, all you have to do is just copy, right click and copy the cloud link and go directly to load from cloud, and you'll have the same scan that you're seeing on Jamie's screen once he gets that done.
You know, Steve, it pulled one of those funny things on me again.
What did it do?
Did, and it disappeared. Now, I specifically put it over on my TV, so I'm like, okay, Jamie, don't mess this thing up again. But of course, it is hiding from me. All right, Steve. Well, you know what? I can think on the fly here. What I'm going to do, if it's okay with you, is I'm just going to, you have your chat panel up, right?
Mm-hmm.
All right. I'm just going to Skype these over to you.
All right.
And then all you have to do is copy paste them, put them back in the chat. I don't know why my window just decided it was going to disappear, but whatever. Okay, there you go.
So we got 3 of them, right? Is that what you sent in?
Copy all that at once and put it in. It should be fine.
Well, I should copy all of them at once. We got 3 different codes in there.
Mm-hmm.
Paste, and let me just check and make sure all the codes look good. Okay, I'll click send. So the chat window should have 3 of those scans: turbo up family, no resistance; turbo down, no support; and compare account family.
Perfect.
So those that we're asking. Now, for any reason, if you don't get a copy, don't fret. You can just always email info@trade-ideas.com. If you're watching from the YouTube channel and you don't have access, please just email info@trade-ideas.com and request what you saw on the webinar by name, and we can get those out to you.
Right, and one last question to comment on here. Chris was asking, is turbo up on one of the channels? Not the ones that I just dropped into the chat. Those are a little bit more evolved. But if you go to the active trading channel, which I've pulled up here, you can see one of the very first. This is going to be turbo breaks up, just showing stocks hitting new highs with accelerated volume. This is the only one that's present in a channel, just FYI. All right, looks like we're pretty much in the last 10 minutes of the hour here. So Steve, any last minute nuggets of wisdom to bestow upon
maybe
our crowd?
just well, I will 2 things. I will get to Kirk's question in a second, but I will repeat what I said. Let's see how tomorrow's close goes. We've seen weakness early in the day, and we see it always get bought back at the end of the day. We did not see that today. Let's see if we see that tomorrow. Kirk's asking, is there any way to copy and paste from the gappers list and paste them into your broker? I think what you might mean is maybe linking, so you can click on those gap alerts and have the broker automate or update that symbol with the charts and the input.
Here, let me demonstrate here real quick. It might be helpful. It might not, but I think it would.
Just copy and paste. I don't know what you'd paste into your broker though. What
Right. Well, you can get all these symbols by highlighting and then just hitting Control-C, right?
Watch list. Okay. Okay. Watch Jamie. He's going to show you there, Kirk. Gotcha.
Right. So we hit Control-C here, and then we can just pull up any other type of document. So, for example, I could just pull this guy up, and let's just pretend that this was the area in my brokerage that I was supposed to paste to, right? So I'd come down here and I'd right click and I could paste. Actually, Control-V should get it done. Okay, but it just copied that guy. I must have taken my hand off. So Control-C, and then I come over here and I either use my mouse and hit paste. And you can see it's going to drop the whole column in there. So hopefully, whatever the the piece is at your broker dealer, you should be able to paste right in there. All right, cool. Excellent.
So with that done, yeah, that's about all I have for today. I'll see a lot of you guys tomorrow for the Trade of the Week webinar.
All right, sounds good. Thank you very much, Steve. And so, Scott, I think it's time to bring you in if you're ready, sir.
Yeah, thank you. So thanks everyone for attending today. If you're an interactive brokerage client, remember that you can access, if you have premium, you have to have premium trade ideas, but you can use Brokerage Plus for interactive brokerage for free for now. It's not a paid product on its own yet. And if you're already a subscriber, you'll be grandfathered in if you keep your subscription. So if you're an interactive brokerage client, try it out. Email info@trade-ideas.com for help setting it up. It'll let you auto trade your trade idea strategies through IB, or you can manage your portfolio via it also. So we have a podcast that comes out on Fridays. We had a good one last Friday. You should listen to it. What you want to do is go to your favorite podcast app and just search for Trade Ideas Podcast. You can subscribe to us on iTunes, any of the other podcatchers, or whatever they call them. And get the newest one that's coming Friday. Download last Friday's or any of the earlier ones that interest you. We put them out every week. We do it for you, so subscribe. There's a discount code. Lets you save 15%. Holly Days. You need to make all caps. Our codes are case sensitive. But Holly Days will save 15% off your first month or year of trade ideas, either premium or standard. Remember, both or any subscription, either the monthly or annual of Trade Ideas Standard or Premium, includes a full hour of one-on-one training with Steve or Jamie, Andy, Sean, one of our trainers. Just go ahead and become a subscriber, and after you've downloaded the software and tried it out, you're going to have questions, so schedule your hour of power training. Thanks everyone for attending. Email us info@trade-ideas.com with your questions. You can follow Jamie on Twitter at QuantBot. Steve Gomez on Twitter is Today Trader. Dan Merkin on Twitter is at TradeIdeas1. We also have at TradeIdeas and some other handles. Follow us on Facebook so you can get updates there and share that stuff with your friends. It's Trade Ideas Pro on Facebook. And you can reach out to Jamie or Steve directly with the emails on your screen. Thanks, everyone. The recorded video will be up later on tonight. You get an email reminder tomorrow about how to find it. Thanks, Jamie. Thanks, Steve.
Thank you.
All right. Thanks, everybody, for popping in. And Steve, we'll see you tomorrow. Bye-bye, Scott.
Good. Bye-bye.